AMC stock is going quite crazy today, up in between 12 and 13% likely by the time you guys see this video. On a technical basis, it is looking beautiful. We're going to talk about that. My price prediction was in between $16 and $20 by the end of the week. It looks like that might actually be a possibility given what we are seeing going on right now. So we're going to talk about all of this information, specifically about AMC and why the stock is up in between 12 and 13% right now. So if you guys find value out of this video, hit that like button and subscribe to the channel. If you guys want to come trade with me live in real time, link down below in the pinned comments and get yourself those free stocks also down below in the description. And if the pinned comment is not down there, link in the description for the trading community. So AMC up about 12.13%. We are up $1.52 at the time of recording this video, currently sitting at $14.09 per share. So this is a really good move comparatively to the move that we've seen over the last 2 days. 2 days ago, we fell about 5.5%. Yesterday, we fell about 1.64%. Well, now you've essentially made all of that up plus some. And on a technical basis, we have really broken out from this rut that we were starting to get in over the last 2 days. Let me explain this a little bit more. So I have this descending level of resistance, this line from the peak which we seen on May 31st, right at $16.13 per share, going all the way down to the peaks that we've seen, up until recently. Right? And then I have an ascending level of support. Well, what we can see actually happening around this 50-day moving average, specifically this orange level, was we were getting support and resistance around this level, right? It was a little bit of support at the beginning, a little bit of resistance the third day, resistance, but you also found support on this ascending level of support. You guys see this right here. Even yesterday, you did go under that by quite a bit, but you ended up recovering and actually closing above this ascending level of support, right? Same thing for today. You went under that a little bit and then you started to rip to the upside, breaking out above the descending level of resistance, this line right here, breaking out above the 50-day moving average, and now you're really in no man's land where we could make another bigger move back up to about $16 per share. That would be the 100-day moving average. The $15 level will be important on a psychological basis. Some people don't understand why this is important, but it's like if Tesla were to hit $500. Well, that is a psychological support level, right? Or if Tesla were to hit 1,000, that's a psychological resistance level, right? People tend to make more one-way decisions around key levels. So $15 per share, if you can break out above that, that would be very, very bullish, right? But you might find a little bit of resistance around there as some people might step in, possibly short the stock, possibly buy puts on the stock around 15. So I think that's going to be the key test for tomorrow and really for this next upcoming week. We did get some data that came out today. We did get a little bit of good news, a little bit of worse economic data, which is good news for this markets, but the markets are literally losing it, right? So you're actually seeing the bond yields going up in a very big way today, about 10 basis points, now at 3% on the 10-year treasury, and these growth stocks are ripping. We'll talk about what this means a little bit more in depth in the next video, but long story short, the markets are a little bit more fearful today about inflation, but we're also fearful about a recession. And what do you want to do if you're fearful about a recession? If you think deflation is coming because of a recession, if you think the lack of growth is coming, right, which is a recession, well, you buy stocks that are growing, right? You pay for that growth, and that's why you see a lot of the stocks in your portfolios that are likely up today, and likely up in a pretty major way as well. It's because people are still fearful about a recession. Fed Woolard and Fed Bullard, they did speak, and they are still speaking as of right now. And what we have gotten from them is basically we need to front load rate hikes. We need to get rates up as fast as possible because, hey, down the line, we're not going to be able to because the economic situation will soften and pretty much go into that dreaded recession. And that's what the markets are starting to price in. Fed Woolard says we have a good shot at a soft landing. That headline is just coming out right now, helping the markets to bounce back up a little bit after we have just started to slip recording this video. Now, let's move into the Ortex data for AMC stock, and let's look at the options for today. So you have 1, 2, 3 July 15th calls coming through. One put, 2 calls coming through. A $16 call worth about $14,000, a $14.50 call worth about $20,000, and a $13 put worth about $12,500 for that July 15th expiration. For July 29th, you have a $14 call worth about $75,000 that is coming through. Overall, 8 orders totaling $187.91,000, positive order value of 83%. The short interest, estimated at 17.77%. We know this is not true. What has been happening, if you are unaware, if you do not watch my videos all the time, what has really been happening is these hedge funds, Q3 came rolling around, right? And these hedge funds are like, yeah, we probably don't want to be short on AMC stock. So they had a lot of shares out on loan ready to short the stock, likely due to algorithmic trading programs, right? Well, you've seen a lot of shares that were out on loan that were not sold short yet actually be returned, and that is messing up the estimated short interest. When you have a lot of shares returned, Ortex doesn't necessarily know if it's shorts covering or just shares that are being returned. You still have free flow out on loan of about 27.14%. This hit a high of almost 40%. The short interest as of June 15th was almost 22%, sitting at 21.92%. We are not at 17.77% short interest. You have not seen anything reflective of shorts actually covering. Today is really the only day you could say, hey, maybe a small group of shorts covered, but still, you're not seeing anything explosive relative to the low volume that we have seen that would indicate that shorts were covering in any kind of way. So you've seen a lot of shares be returned over the past week or two, and that has definitely pushed down the estimated short interest. Coming here in the near term future, we will see likely the short interest get revised back to the upside as the actual settlement date does come in for the exchange short interest. So there you have that. Cost bar max at 16.65%, cost bar average at 13.31%, cost bar minimum at 0.56%. Let's look at the available shares. You do have about 1.2 million shares available, but it's still 12% cost borrow, so it's not very attractive in that regard. You actually had over 2 million at one point today that was available to be lent out for about 12.71% cost borrow rate, and that is very, very high. I mean, those are not pleasant rates. You need to see a pretty big move to the downside to actually make money off of that. So there you have it. Another reason why I do think AMC stock is rallying harder than a lot of other stocks is due to obviously people buying these stocks for the growth, right? AMC now has a lot of growth to get even back to where it was pre-pandemic, but there is signs that people are going out and seeing movies, right? Minions, Rise of Gru, that did very well. People went out with families. 68% of all tickets were in family groups, and they went out and spent money. So even if you go into recession, even if all these bad things happen, I doubt you want to bet against the American family not going to movies or not going out to do things. People have been cooped up inside for so long. They are going out and they are going to do things. So there is a really big reason why I do think AMC stock is rallying as well. But you could also point this to some of the option activity as well, in my personal opinion, because if we go ahead and take a look at the options, we had about 500,000 calls that were out of the money just yesterday. Now you're looking at 462,000 calls that are out of the money for July 15th, about 50 100,000 calls that are currently in the money. For this Friday, you had over 100,000 calls that were out of the money. Now you only have 67,500, and you do have about 40,000 calls that are currently in the money. This looks like the start of a gamma squeeze, in my personal opinion. If we continue to get that bullish reaction, then we're probably going to see a full-on gamma squeeze, in my personal opinion. You also did have puts that were in the money of about almost 100,000, now at about 74,000. So you've seen a lot of calls and a lot of puts go out of the money and go into the money, and that could cause a pretty explosive move, like in which the one we are seeing today. So I think that is the main thing that is really moving AMC stock by and large for the day. Now, max pain for this Friday for tomorrow is $12.50 per share. We're about $1.50 above that. That's where we were yesterday, so we'll see if that happens. I wouldn't hold my hat on it, but for this next upcoming week, for July 15th, you do have max pain sitting at $15 per share. So I do think that is a little bit more likely, and I do think you'll probably be close to $20 per share, if not higher, depending on how big this gamma squeeze event does play out to be. Now, the somewhat bullish news for the markets as of today: jobless claims edge up to the highest since January, planned layoffs soar, trade deficit hits 2022 low, initial filings for the unemployment benefits total 235,000 for the week ended July 2nd, a gain of 4,000 from the previous period. The U.S. imbalance for goods and services declined to 85.5 billion from 86.7 billion in April. So that is potentially a good sign for GDP. This is a bad sign for the economy that the initial jobless claims did gain 4,000 over the last week, because people want to see economic activity slowing down, so potentially the Fed does not raise rates as aggressively. That's really a long shot. 4,000 new jobless claims is not going to dictate what the Fed is going to do. That unemployment rate will dictate what the Fed will do. By and large, but that's not going to come down for a very long time. And Fed Bullard, Fed Waller, they're talking about front-loading rate hikes, so we're going to have to see the 10-year Treasury go up in a big way. And what is that going to do for equity markets? Well, it's going to drop equity markets, and I think that is really why I'm so confused about what we are seeing for the day, specifically with the NASDAQ up almost 2%, Russell 2000 up 2.5%, and you go to the bond market's up about 10 basis points, now over 3%. Usually, if bond yields were up 10 basis points in a day, the market's seen a down 1% day or down 2% day. We will have to wait and see, but I do think when the Fed is telling us we're going to raise rates no matter what, 75 basis points over and over and over and over again, get these rates up to very high levels that we have not seen in a long time, the 10-year Treasury cannot stay at 3%, right? At the next Fed meeting, you're going to be in between 2.25% and 2.5% for the 10-year Treasury. And like the bond yields at 3%, that just don't jive. The bond yields have to go up to at least 4%, and it could do that in a very short amount of time. And that's where you could see some major downside coming here in the near-term future. As you guys know, end of July, I do think you get that Fed rate hike the 27th. You get advanced estimates for Q2 GDP coming the 28th. And then you also do get big earnings spanned out in between there. I think that's where you could see some more downside for the overall stock market. So that is going to be all for this video. Nice, short, sweet, condensed video of what you guys need to know. Hit that like button and subscribe to the channel. Thank you guys for tuning in. Like I said, get your free stocks down below in the description. And if you guys want to come trade with me live in real time, link down below in the description as well for that one. You guys enjoy the rest of your day, and I'll see you in the next one.